Welcome back. Calls of the day. We have a double downgrade for Lilly. It was to reduce from buy at HSBC. This price target, I got to do like a double take, Joe, to 700 from 1150. That the risk reward is no longer attractive. That the market has assumed a significant market share for Lilly with potential economic sensitivity to the adoption curve for GLPs. We think these expectations might be revised down. Wow. They report this week, too. That's huge.
I've been a strong supporter of what we've witnessed in terms of the price action in Lilly over the last several years. Everyone knows it's been one of the significant contributors of the ETF. But this is a good note. This is a good note that really gets in depth into the challenges that Lilly could be facing. Now, if you're just purely studying price, okay, you're looking at momentum, let's get past that. It looks fine. But now when you look underneath the hood and you look at the things that are important to me, you look at their revenue growth. Their revenue growth, there's too much variability to it. So you're talking about 44% revenue growth in the last quarter. But then in the second quarter of 25, we're going to knock that down to 27%. You have a very strong gross profit margin in the 80s. But again, as you move through the course of the year, that begins to decelerate. So the possibility of deceleration in revenue growth is real. And the other thing that I think you have to think about, besides the fact that there is competition now, besides the fact that Amgen is coming with a weight loss drug, is there elasticity to an economy that begins to contract for people utilizing the drug?
This move in the market on the stock chart today says to me that the market kind of says, yeah, whatever. I mean, the stock's down 1.4% on a double downgrade and a price target going from 1150 to 700. And maybe they don't believe that there is as much economic sensitivity to the adoption of GLPs. I mean, I suppose they're suggesting that if we go into a recession, then people are going to be, and because consumer sentiment is where it is, that they're going to be less able and apt to pay for these GLP-1 drugs that are not covered by their insurance companies.
I think the calendar helps Lilly, and just because they're reporting earnings on Thursday. So you're going to wait until you hear what the earnings are. You're going to wait to see what the guidance is before you actively begin to pare down the position. Look, all I'm saying is I have an openness to what I read in the report as someone who obviously has a bullish position in it because of my ownership in the ETF itself. So I have an openness to look at this, and I do see some of the things that they see that could be challenges as you move ahead.